Hey, hi, this is Femi. On this video, I'm about to show you how to set up your own chart on TradingView. And I'm going to show you how I set up my own chart personally. So first of all, you want to go on TradingView. You want to go on tradingview.com. This is a basic kind of video. So the more you show up, the more you understand how to use the tools on TradingView. So you want to sign up on tradingview.com. You want to have a paid version. It's good to have a paid version because you're going to have access to, you know, some tools like some indicators. So, and these ads that keep on popping up, you're not going to see anymore when you have a paid version. And also it's going to give you access to setting of alert. I'm going to talk about how to set alert on this video too. But before then, what is chart? Chart is a tool that make traders to make sense in the market. It's a tools that allow traders to make sense in the market. So without a chart, technically, we cannot analyze the market. So first of all, we have three popular charts used, and we have the candlestick chart. This is the candlestick chart, and it's the most popular use. But we have other charts known. We have the line chart and the bar chart. So these are the line chart and the bar chart look like. So these are the bar chart look like. These are the line chart look like. So I personally, I don't use the line chart or the bar chart. I use only the candlestick chart because it shows the open and the close of price in different time frame. So it has a clear view, to see what price do in the past, and the present. So I like to use the candlestick chart. And actually, it's the most popular chart used in the trading industry. So this is how the chart is going to look like. It comes with a red and a green candle. So actually, if the market is going down, which is also known if the market is selling, or if the market is on downtrend, it's always going to show the red candlestick. When the market is going up, it shows the green candlestick that the market is going up. So it's just a simple thing. If the market is going down, if the market is going down, it shows the red candle. If the market is going up, it shows the green, right? So, but all you want to know that, okay, when the market is down, it's selling. When the market is going up, it's buying. That is just a basic thing you want to know. So don't get confused with the color. You can actually change the color on any type of color you want to change it to. So don't get confused. When the market is going down, the market is selling. When the market is coming up, it's really buying. It's buying. So now you can change the color if you want to. How do I set up my own chart? So I like my own chart pure black. I like my candlestick color to be pure black. I don't like the red and green candlestick, and I will tell you why. So the reason why is that because I like to read my sorry, I like to read my candlestick like the way I read the book. So I don't have to, because this color can cause emotion for you, especially if you're a beginner in the trading industry. So, when you see the red color, you'll be like, oh, the market is selling and I'm about to close trade because I have a buy position. So no, you don't want to get scared and you feel like, okay, you know what? I don't want any color that's going to, affect my emotion. So you want to say the color black, all around black. If you want to, you can say any other color like purple, any color. So how to set the color, you can click on right click and come down to setting. The first is the symbol. And as you can see, we have the body, the border, and the wick. So before we go, what is the body, the border, and the wick? So on candlestick chart, this is a candle, right? The green color is a candle that shows the wick and the body. So the thin part of the candle is called the wick, and the broad part is called the body. So the other part is called the body, and the thin part is called the wick. So you want to take note on that. Let's go back to the setting. Come to the symbol. change the color to pure black if you like to, or if you have other color in the mind. Change the border to pure black. This is how I like my chart to look like. Change the wick to pure black if you want to. And press OK. So now the color has changed to pure black, right? So now you want to know the market is, when the market is selling, when the market is going down, it's selling. When the market is coming up, it's buying. It's just simple. You don't have to use any color. You can use any color you want, but you know, the color doesn't stand for okay, when the red is going down, it's selling. Actually, when the market is going down, it's selling, you know. But you can use the color to represent the sell, and you can use another color to represent the buy. So just how it is. So the next thing I want to do, since I'm showing you how to set up, how I set up my own chart personally. So we have a horizontal line and a vertical line at the background. So I don't like to see that. I like my chart to be clean. So I'm gonna go right click again and come down to setting and come down to appearance. So we have the Greek line, the vert and the horizontal. Come down here and load this opacity to 0%. Go to the next one, load the opacity to 0% and press OK. So now at the background, you can see it's clean and no more vertical and horizontal line. So the next thing I like to do is to make my this cursor to a straight line. I like it to be on a straight line. So I'm going to come down to setting again, come to crosshair, change it to the line. You can actually increase the thickness if you want to, but I like it like this. Then press OK. So now the crosshair is now on thin line. The look has changed. So the next thing you want to know, like I said, you need to have a paid version. So this ad is not gonna disturb you at the time you're gonna cancel it. So the last thing we want to look into is the time frame. So the time frame right now we are on 4 hours time frame. It means a candlestick takes about 4 hours to form, and we have other time frame like day time frame, weekly time frame, monthly time frame, and we have 15, 5 minutes, 1 hour, 1 minute, 1 hour, 2 hours, 3 hours, and 4 hours time frame. So on the monthly time frame, it means this candlestick takes about 1 month before a new candlestick is gonna form. So you can see at the right hand, it shows we have 15 days, 6 hours for a new candlestick to form. So this on the monthly time frame can come down to the daily time frame. It represents a day. A candlestick represents a day. Coming down to 4 hour time frame. A candlestick represents 4 hours. Come down to 1 hour time frame. Candlestick represents 1 hour. 30 minutes time frame. One candlestick represents 30 minutes. So as a day trader, what I do, what time frame do I use? Sorry. I use from the 4 hours. Sometimes I use a daily time frame, but most of the time I use the 4 hour time frame to look at what the trend is doing. And I come down to 15 minutes to look for an entry point, right? So I use it like multiple conferences. I use it together. Lower time frame for entry and higher time frame to check what the market is really doing, what trend are we in. So that's it for the time frame. So we have indicators. So not on this video, I'm going to show you the indicator I use, but if you have a paid version of TradingView, you're going to have access to varieties of indicators. So yeah, there's an indicators. Indicators give you extra confirmation like a extra confirmation on your strategy. Different traders use different indicators. Some don't really use indicator. Some use RSI. Some use like moving average. Some use the EA. Some use stochastic, different indicator. So as you progress in your journey, you're going to look for a favorite indicator if you want to. But without the indicator, you can still analyze the market. Yeah, for sure. So people use the indicator as an extra confirmation on their strategy. So that's it for the indicator. So to have access to varieties of indicators, you have to have a paid version of TradingView. So the next is the alert. So let me show you the alert. Alert is actually a notification whereby if price get to my entry or a key area I want the price to get to, I'm going to be when the alerts get it, I'm going to get a notification on my phone or on my email. So this is how the alert looks like. So let's say, for example, we have the price going up right now. It's bullish, it's buying right now. And now we have a reversal and the price come down and hit this line. I'm going to get a lot on my phone. So let's say this place is going to be my entry point. Then I'm outside, I'm doing something else, having fun, doing something, busy with family. So, but when the candlestick fall back to this place and I want to get a notification, as soon as the candlestick hits this point, I'm gonna get a notification on my phone. At that time, then I can like, oh, you know what, the market has get to my entry point and I need to take the entry immediately. So that is the work of the alert. So right now, if you don't have a paid version of TradingView, you can only set just one alert. But if your account is paid, you can set as much as you can. So that's the work of the alert. You can come down to the edit, come down to notification, send to email if you want to get a notification on your email or notification in the app, but you have to have a mobile app version to get the notification on your phone. So that's it for the alert. So at the right end, we have a full screen mode. You can set a full screen mode. These are just a basic video, right? So you can set a full screen mode if you want to. This place you can actually like, okay, set, okay, you can see like I could not use that because I'm on current plan, the basic current plan right now. So layout, what is layout? The layout, like maybe you have other financial instruments like you want to see at the same time with the one you're currently looking at. You can change the layout to a double screen whereby you can look at other layout and the current one you're looking at without closing one. So that's it on the layout. And on over here is take a snapshot. You can save your chart as on your mobile app, or you can save it on your computer, your laptop if you want to. So I use the snapshots to save, the chart. Maybe I have a good day on the in the market, and I had take profit from this market this very day, and I want to like screenshot it so that maybe this kind of setup come back again, because history do repeat itself again. So like I want to take this same setup. So since I want to take this same setup in the future, I would need to screenshot it and save it like a journal, so that I can know, okay, this is what I do to have made this target. And if I have a losing day, I want to do the same thing. Okay, what did I do wrong? I think this is the thing I did wrong, and I need to take a screenshot of it so that I don't do the same mistake anymore. So that's one thing you can use to create a journey in your journey when you learn how to trade. So that's it. This is how my chart is gonna look like. So the next is gonna be the right hand is the price of this particular instrument. So this is Nasdaq, and Nasdaq is an index. Nasdaq is an index in US index, and the current price is 13,496, right? So these are the most like financial instrument I'd like to trade. First is Nasdaq and crude oil. So you can add whatever watch list you already have in mind. Maybe you the type of trader that like to trade the currency pair, the metals like the gold, the commodity like the US oil, or you like to trade cryptocurrency. You're gonna see all type of watch list. That's all type of financial market on your right hand when you come over here. And you want to be like me and trade the Nasdaq like me, you have to take everything down and leave the Nasdaq alone. So yeah, that's it. I only like to trade Nasdaq. So trade USO every now and then, not all the time. So yeah, let's take this off. Sorry, guys. The next is you want to save your layout. On this place is unnamed, right? Maybe at the end of the day, you change the color of your candlestick. You have set up your chart in a way you don't want it to reset, because most of the time when you close up the tab and you come back to the chart, the color has changed again. The whole setting you made as take off, you have to set it again. So all you gotta do is come on name and save the chart. Come down here and save the chart. So on my left hand is the tools. The tools, these tools are tools you can use like to analyze the market. So maybe you're back testing, or you're a day trader like me, you're trying to analyze, okay, what you think the market is going to do before the open or before your current section, because there's different section in the market. So maybe your section is not yet open and you want to analyze. So these tools is what I use, to make sense in the market. And the first one is the crosshair. The crosshair to check my current price, to check my key level, to know what price is doing at that key level. So the next is trend line. Honestly, I don't use trend line, but I'm going to talk about it. So what the trend line do for you is you can use the trend line to drop a trend. So like I said before, when the market is going down, it means the market is selling. And when the market is, coming up, when the market is going up the other way, it means the market is buying right now. So we have the downtrend line, and we have the uptrend line. So right now the market is uptrend. Like I say, when the market is going up, it's buying, right? So you want to okay, how do I mark up? How do I use my trend line? So you want to take your trend line from the support level, the down mean the support level, which is also the supply area, to the resistance level. So before I go, let's support and the resistance. Resistance is the ceiling and the support is the floor. So you want to take the trend line from the floor to the ceiling, right? So you're going to mark it up from the body, and you're going to mark it to the future. So let's say this whole movement has not taken place. So this is how you mark up your trend with your trend line. And if price gets to the trend line and break below the trend line and come back to retest that area and continue selling down, the trend has been broken. So we have the sellers. That we have the bearish trend coming in. So the trend line is to draw your downtrend line or your uptrend line. Sorry, the trend line is to draw your uptrend or your downtrend. So how do you draw your downtrend with your trend line? Yeah, let's look for a sell in the market. So okay, let's say this is a good example. You just like want to draw from the to the future. So let's say the price has not gotten to the stage, you know, like, so now if the price broke above and we see a pullback, which is also known as retracement and continuation, the downtrend is over. This is just a basic thing. I don't use the trend line anymore. You know, as you progress in your journey, you're going to understand more about the market. But it's good to be aware of these basic tools, you understand? So this is how to use the trend line. So the next tool is the highlighter. So the highlighter, I use the highlighter to mark up the key areas. I don't even use it anymore like that. So I'm going to show you how to use it. So let's say I want to, like, you know, I don't want to use the trend line and I want to mark the, you know, key areas. So we have a level of support. Yeah, these are the key areas. So key areas, like when the market's really bullish, I do put up the key areas where, you know, price can, you know, we're going to see price after the break of structure. We're going to see price coming back there to retest those level and continue. So I like to put my, you know, highlighter at those key areas, you know. So, you know, like when I analyze the market, actually, like when I analyze the market, this is what I use the highlighter for. I don't really use it to do anything else, just to mark up the key areas. Same as let's look at the downtrend, you know, like yeah, coming, let me show you. So the resistance level, so these are like the key areas. So if I don't want to use my if I don't want to use my trend line, so I just use the highlighter. So the next is test. The next is test. So maybe on weekends after the market is closed and I want to, like, okay, you know what, let me see what happened on the market today. I want to write something out. I want to make a journal and I want to make sense with the market. Do I have a good week? Do I have a bad week? So I use this test to write things down on the chart and, you know, to analyze the market, to take a screenshot of it. So yeah, that's what I use the test for. So the next is the long position and the short position. We have the price range, we have the rectangle, and we have the horizontal ray. So the next is the long position. So long position is, let's say, let's go to 15 minutes time frame, and I want to show you, for example, I got into this trade. This was on Monday, 15 May 2023, right? So this was the Asian Open, and I bought this Nasdaq, and I target a resistance level. So now this is a long position, and here was my entry. Yeah, this level was my entry, and this was my target. A resistant area. This is a resistant area. So, and I set my stop loss 25 pips. So my stop loss was 25 pips, right? So we have a very small support area here. Doesn't show very well, but it's a support area. So now that was my target. So this is what's it called, long position. Long position is, you know, after you analyze the market and you want to, like, set up a risk to reward ratio. So this is what you're going to use. This is the tools to use to calculate your risk to reward ratio. So now I'm risking amount, the risk amount is 25 pips, which is 0.90%, and I'm my target is going to be 83 pips, which is 0.63. So I'm risking 0.19 to gain 0.63, which is 1 to 3. The risk to reward ratio is 1 to 3 risk to reward ratio. So now when the price gets to that stage, when the price gets to my target, automatically it's going to close, because that is where I place my target. That is the at that price I put my target in that price. So this was a trade I took and was sent to the group, and we made money from it. So yeah, this is how to use the long position. It's just to calculate your risk to reward ratio. The same thing as the short position. The long position, you can actually change the color if you want to, but this is how it look like when you create the trading view for the first time. So you can go to the setting, like you can go to the setting and change the color if you want to. But this is how it look like. Basically, how to calculate your risk to reward ratio. So the red side will be your risk, the amount of risk you're taking, and the green side will be your target, that is the amount of profit you want to make. So there's this basic terms used in trading. You want to risk 1 to 3 risk to reward ratio. So if you are risking, let's say you're risking a $500 on this trade, so you should be making $1,500. That is 1 to 3 risk to reward ratio. So that's it on long position. Short position is when the market is coming down, and meaning when the market is selling. So let's say we'll take our entry from Asian section. This was Asian section, and we'll take our entry from the Asian section, right? And we'll set a 25 pips stop loss, and we target the 25 pips stop loss. And we target a resistance level. Okay, let's say we target this resistance level over here. So this is going to be the amount of risks we want to lose when selling. And now this is when the market is selling. When the market is going down, is actually selling. It's also known as shorting, the market, when the market is short. So this is going to be, the red side is going to be the amount of risk we're taking. So we're risking 0.19 to gain 0.59 on this trade. So now this is the amount of pips we're risking, and this is the amount of pips we're targeting. So this is going to be 79 pips. The stop is going to be 25 pips. So the middle line is going to be the entry point where we took our entry, where we, took our entry. So this is the amount of risk to reward ratio. This is the 1 to 3 risk to reward ratio, 3.12 risk to reward ratio. So that's it for the shorting. That is the basic explanation of how to use the long position and the short position. So the next is the price range. So, but how do you find these tools? You can just come down to this place and set it as favorite. Come down to this place and set it as favorite. Come down to a lighter, set a lighter and a rectangle as favorite. So when you set them as favorite, you can be able, you're gonna see it all the time on your chart. You can actually turn it off if you don't like to see it. You can come down here and share the favorite or turn it off if you don't want to see it. So yeah, that's it. So the next is the price range. So the price range, what do I use the price range for? Is not something that is just a way to calculate my percentage, like my pips, point of percentage. So let's say we have an entry over here on New York session. Let's say we have a entry New York session, we have an entry over here. and we want to calculate how many pips we're going to be targeting. Let's say we targeting this level of support. This is the level of support over here. So let's say we're targeting this level of support. So at this point, from the entry point to the target, it's going to be minus 98 pips. So we're going to be, you know, in the market, you can sell and make profit, and you can also buy and make profit. So either way, if the market is selling, you can also make profit. If the market is, buying, you can also make profit. So if you see a fundamental news, telling you, this country economy is going to collapse, this particular country index is going to collapse at this point, and you have your analysis right, you can actually come to the data chart and analyze the market and short this index, which means sell this index. So let's say we're selling the Nasdaq, which is an index market. It's under the indices market. So now we're shorting from this price, which is 13,416.7 to 13,318.0. So we're gonna make a 98.3 pips. So it's actually, if you don't like to use the long or short position, you can actually use the price range to calculate your percentage. So yeah, that's it. That's the basic explanation. So the same thing, let's turn it to the buy. So let's say we're buying, and the market, we want to calculate maybe before this whole move take place, and we want to okay, you know what, this is going to be my entry point. Entry point is the place you click the buy and sell button. So let's say, it's going to be our entry point. This is the place. Our entry point is going to be 13,304.2, and we want to target a resistant area. So, okay, let's say we're targeting this area here. This is 81.5 pips. It's 1.5 points. So now this is going to be our target, right? This is going to be how much we, making. So now we already know how much we're making before this whole market take place, before this whole market make the move, right? So with the short position or the long position, you can actually use that to calculate how much you're losing, how much you're going to be risking. So yeah, that's it. Basic explanation on how to use the price range, both buying and selling. So the next is going to be the rectangle. The rectangle, I use this rectangle to mark. I use this all the time. This is one of the most tools I use. I use the rectangle to mark up my support area and resistance area. My key area. Yeah, my key area. This is support area. I use it to mark up my support area. Sorry. Use this to mark up my support area. We have another level of support over here. I use this to mark up my support area. So I use it to mark up, key levels area. So this is what I use, what I use the rectangle box for. So let's say, I want to mark my key area for sell, like the resistance area. Okay. Let's look for a nice setup. Let's come down to 1 hour time frame. So yeah. So I use this to mark up my key area for resistance, just a basic. It's not really that hard. Resistance area. When the market is trending, bullish or bearish. So bullish is when the market is going up, bullish. When the market is selling, you can still call it bearish. So I use this to mark up my key area, my resistance area. So yeah, that's what I use a rectangle for, to mark up my key area. The last is going to be horizontal array. Horizontal array, it's not really hard. It's just, the same thing as the rectangle. To place my support area or resistance area is nothing major. It's not really major. So let's come to daily time frame. I feel like, what price is going to get to this resistance area. I can just come here and, put my horizontal array at this point, knowing that price is going to get to this resistance area, this key level, and when price gets to it, you're going to see price rejecting this area. So, just, I use it for my support and resistance area. That is my key area. It's nothing major. So this is the basic, way to set up your chart, as a beginner. It's nothing hard, and I hope I've been able to show you. So as time goes on, you can, like, look for new things to learn from the chart, because there's other things, to look at. To, I don't know what country you're setting up your chart from. You can come down here and look to set the time, so you can, have a, the exact time of your country on your chart. So you can know, okay, now this is the London section, this is the New York section, so yeah, and the Asian section. So yeah, this is the basic way to set up your chart. And yeah, once again, my name is Femi, and I hope this helped.